Hello everyone and welcome to today's Insider Report Market Update. My name is Jose Ricardo Jaén, editor of the Prosperity Digest newsletter and product specialist at Market Traders Daily. We're going to take a look at a couple positions that we're looking at right now in the Insider Report outside of the day-to-day portfolio for paid members. The idea is to show you how powerful this strategy is. On behalf of our senior editor, Ross Givens, we want to thank you for watching this video. You will see how structured is our approach to the market and how company insiders truly lead the way into finding double-digit winners, triple-digit winners, and explosive gains in less than 2 weeks. Just in the last 4 weeks, Ross Givens closed 2 profitable trades on 2 well-known companies in the U.S. For more than 250% on the call options and also 200% on the second company. And just last week during earnings seasons, we have plus 88% close on the full cash equity position. So that's just to share with you a few ideas of what exactly pay members are taking home, how they're banking these positions in the Insider Report. So we decided to share weekly, daily basis as we see opportunities popping up in the market. We're going to do that. We're just going to follow up the smarter traders, investors in Wall Street, company insiders. That's it. Okay, so before we go into the charts and explaining everything, please remember that these videos are for educational purposes only. They're not an invitation for you to buy or sell any security. However, it's true that we do this in order to explain how profitable is our strategy and how we manage risk. So if you decide to take this information, remember that we are not financial advisors and you have to consult your financial advisors, review your risk profile, and rest assured, we want the best for you. So if you decide to take this information and apply it, make sure you measure your risk. Remember, you can make money in any asset class as long as you measure your risk. Okay? Having said that, let's jump to the charts. Let's see what we have for today. Now, one company I've been following for the last 6 months after the debacle of the last year, the 20% drop in the S&P 500, it's Kellogs. I don't feel that you need to be in the U.S. to understand exactly what this name represents. It's an American brand. We all grew, the majority of the kids, myself, with Tony, Tiger Tony, Captain Crunch, Lucky Charms, Life. You mentioned Cocoa Puff, Trix, Pups. You mentioned it. We know the brand. Of course, one of the main things happening is that consumer trends, consumer favorites, they tend to change over time. So what happened to Kellogg's is that the healthy consumption habits have changed. That was translating and affecting the bottom line of the company because no longer their sugarized products. Let's face it, those products were sugarized. That's how the kids were so hyper. But there's an opportunity for them for redesign the packaging, okay, how they present the products, the quantity of the product that is in the packaging, and of course the structure, the composition of the product. So they have the team, they have what is required, and they have the cash to do it. Is it going to happen? Well, it all depends. Now, one thing that we know is that at the Insider Report, we don't take a look at a company if we don't know who is buying. So we know there are 2 key insiders in this company. Can I mention, share that information only for paid members. But what I can tell you and what we'll share today is that we know that there are 2. And they are around -7, -6% on their positions. So I discussed this with our senior editor, Ross Givens, and what we want to do is something called front running. We're going to front run these insiders that we know they have been in positions and they are a little bit behind the game. They are underwater. So in this case, we're taking an advantage over their positioning, as we already have a +6, +7% if we buy now. On top of that, what I will do now is just jump to my charts and work with the Hawkeye trading software. Just got a couple of things I'm working on. Let me see if I can take them away. Okay, great. The Hawkeye trading software. We're going to apply it to equities, can be applied to different platforms. We're going to focus only today on TradingView. Loving the platform. I work with it. Let me just go back 1 second. Okay, and I want to share this information because I think it's important that we position ourselves. I also will take a look at the S&P 500, and I will mention it at the end of this video, and also I will do a full video where I see US indexes going into 2020 and sometime in the beginning of 2021. Okay, this is very important for me, so you understand. We know that last week insiders bought more than $44 million worth of stocks. There's no recession coming. Insiders are backing up every single pullback that we're experiencing. Again, I repeat, insiders, company insiders, CEOs, 10% owners, CFOs, directors bought $44 million worth of stock last week. Does that sound to you like a recession? I highly doubt it. It's not going to happen. You can see all the charts, all the tweets, all the reasoning, arguments. It's not happening. We at Insider Report, we follow, we track the insiders index. We know, and every single time in the last 10 years that there's a massive pullback or a pullback, insiders are coming back. The moment we don't see the insiders coming to the into the picture, those figures will change. Then we'll alert subscribers, and most likely we'll put out a public video for everyone to know, because we want to make sure we're here to build, assist you through our products and software to build wealth. Now, this is the chart. I'm looking at a monthly chart, weekly, monthly chart. I'm going to start with the weekly. I don't take a look to any security. We don't touch anything for less than 6 months. My outlook is 6, 12, 24. Some at times 36. It depends. Right now I'm looking at 6, 12, 24. Kelloggs, we're looking at it at 12 to 18 months. I want to repeat that. 12 to 18 months. Very specific what I'm looking here. Excuse me. Very specific what I'm looking here. Okay? So we're going to take a look at this position, and first, couple angles. Right here you can see this dip sometimes in March. So we have the dip in all the way from the 20% drop of the markets, S&P 500. There's a new low at $55. Then it slides a little bit more, $2 from the previous low. We can see here some sort of bottom. I'm just going to zoom this, and you can see we have one left shoulder, right shoulder. We have the bottom here for this particular stock. I'm playing with this bottom here that happens sometime between the March 18, March 19. Now, when I take a look at the picture, I already know, as I mentioned, two key insiders are that they have positions. Those positions are underwater, -6, -7%. So we're taking that probably 650, 680 advantage over them. Now, I want to take a look at another tool that I use all the time. It's very critical. It's being labeled by our senior editor, Ross Gibbons, as the ultimate weapon for you to take advantage of the market. Volume profile to the right. So it tells you exactly where's all the volume generated. So if prices can push higher, they can climb here to this section, to the $60.30 range, and slowly build up to the point of control. This red line that goes all the way here, it means that prices have been rotating. And you can see here, prices have been rotating all the way from 2013. They go up, they go down, they go up, they go down, they go up, they come down, they go up, and they come down. And based on historical evidence, we can think that at some point in the next couple, 6, 12 months, we're going to take an opportunity to go past the rotation, the point of control, and this rotation will help us get to 65.80 at least in the foreseeable future. But I want to know my risk. So I already have an advantage over the insiders. I'm front running the insiders. Now I want to take my view here and see what I can have, how I can project my risk. That's the most important thing I want to know. I want to know what's my worst case scenario. That's what I want to know. So I'm taking the low from March, that's 9%, but at the same time, I'm going to review a few figures. You see here sometime in January 2014, there's this low, and then prices rally all the way up to $68.70. So that low is right here where we are at this point in time trading, not too far from this, so we can actually take even a lower risk position. However, because I'm positioning myself into the 6 plus 12 months period, even 18 months, that's my real target, then I want to play a longer range. And then if I see here October 29, 2012, this is $54. So over here is when really prices took off, and there's here a hidden resistance that now turns support at $51.60. So I'm just going to take this, I'm going to place it right here. I'm not going to deny prices may, if things get really bad, prices can go back here. We're still having the table discussions between the US and China as far as trade talks. I just want to play this portion, 12%. The reason why I want to play 12% is because I want to measure, at least have a one-on-one win risk-reward ratio. So this is all I want to do. To the point of control, the rotation that I discussed earlier, we're going to look at a 14% return. Now, once it's here, this level here, the $60 range, will be the new support. So it can bounce over here and keep climbing up all the way to 70. And that will return a nice, at least here, 21%. So we'll look for my 2-to-1 return here. And that it's how we look at positions at the insider report. First, I want to understand my risk. I already know who is in this company, who is buying. This is the most critical thing. And then I'll look to other tools I have. Of course, following the Hawkeye Trader heat map, we have also the volume structure, professional selling, professional buying, and also we have the roadkill where we get our particular buy signals, as you can see here. Keep yourself around. Come back to our YouTube channel. Subscribe to our YouTube channel. There's a bottom to the right, red button that you can use to subscribe yourselves, because we're gonna keep talking about all these analysis, news, and software that they have been designed with the sole purpose of giving you the edge. You will have the edge when you use this. Imagine that you decide to approach the market with the real technological and competitive edge. How that will change your results. I want you to think about that. Imagine that you know exactly who is buying, in the case of the insider report, and in the case of software, technology working for you with the Hawkeye volume indicator, you know if it's professional buying coming here, and then you have this professional selling. That's the most important. And then you combine these with the 3-step method. I will explain that in future videos. You absolutely can improve the odds. You can move the odds in your favor, know your risk, reduce your risk, manage your risk. That's the name of the game. Manage your risk, okay? So we have here, we're managing our position for 12.5% risk. I can live with that. So pretty much I will say for every $10,000 worth of stock, you're risking close to $1,500 to take home on that single position, $2,250. Pretty much that's the idea. So I have this, but the real winner here, I'm playing very conservative. This is a position that I'll probably add to my retirement account, but the real winner is what I'm about to share with you. And I want to thank you so far for keep watching, listening to me, understanding at Market Shares Daily. We want to take our time. We're discussing securities, trading ideas, investing ideas, market research that can really transform your trading and your bottom line results. Now, the real kicker that I want to share with everyone today is the call options that I'm looking at. I'm looking at the strike. We're looking at September 20, 2019, 62.5 call options. The reason why I'm choosing this is because at the Insider Report we have another way at approaching this business. We look into price rotation. As I explained before, we use volume profile, but we establish our balance between the high and the low so we can play that range. Right now, this is the perfect call options for you to jump in. Right now, the last sale was at 90 cents, but pay attention. The contract low was 58 cents, but the contract high was $2.50. And right now, we're selling, last sale was at 90 cents, day low, probably have the bid and the ask. Okay, the bid and the ask not available, but always very important execution process. Always buy options with a limit order. So basically, we will be looking to buy, you look back the call options, and use a limit order. Never in your life trade options with market orders. You're not trading cash common stocks. It's a different ball game. You have to be aware of the spread between the bid and the ask. This is critical for you to understand. So always use a limit order. Look at what's the last sale price and go for it with a limit order. So I will be looking to add also an opening of the market. You know, there's still potential. There's one more thing I want to discuss during this video is the S&P 500. Probably just take a look at the Dow Jones, something I want to start with, and then in future videos, as I said, a couple of things that I will be explaining. Last sale, go for a buy limit if you do this. Your worst case scenario will be a drop, probably still too soon to go and sell, but usually I take options because it's a leveraged product with up to a 60% haircut if that happens. Keeping that in mind, that's what I do. You can do it differently, but because I'm exposed to, if you see that this way, or $1, it will be 100%. You're looking up to 150% in profits in the next 8 weeks estimated. This is why I'm sharing this information. This is how powerful. Imagine that you can position yourself 3 times a year into call options that can double or triple your money. Do you imagine? Can you imagine how the benefits and how that translates into your retirement account or your trading account? I just want to leave you with that idea. Okay? Perfect. No, so you have it. Here's the information. I will also have this on a blog spot in our website, and also will be posted on the Market Shares Daily Twitter account. Let me share with you at FTD Tweet. I won't get tired of saying this. Not the brightest name for a Twitter account, but it is what it is. We got it here. A lot of great content, financial markets. If you like to digest news, if you want to take news and use it in advantage of your trading, absolutely please follow us on Twitter at FTD Tweet is our address on Twitter. Now, once again, just going to leave you guys with this information on the September 20, 2019, 62.5 call options that I'm looking. Last sell price, 90 cents. Rotation, price rotation, key for you to understand this. Contract low, 58 cents. Contract high, $2.50. I'm looking for some positive results. Everything will be based on how the equity moves along the way, sideways or not. We're still in to take home some, expecting to take home some decent profits from this positioning in what I consider is a very speculative, but hopefully very rewarding position. The call options, September 20, 2019, 62.5 call options for Kellogs. Now, as I said, I'm just going to close. I'm going to share one more time. So I'm going to remove, just close this section. We're going to leave it with some news content. So this is what we have. This is what I share with everyone. Have this information. And now I'm going to take a look before we close this video. The S&P 500. I'm going to take a look. See if I have it. S&P 500. Where I have it. See if we have SPY. See if I can work with SPY. Let me see what else we have. Let's see if we can still have the same process, the Dow Jones. See, we have the index, Dow Jones Industrial Average Index. Let's take a look what's taking place in the Dow Jones. Okay, so we're in a weekly chart. And a couple ideas I wanna share with you before we close this video for the insider report. Okay, I have it here. Now, there is this idea that markets will tank. Honestly, I will say that I will be satisfied in a way if we make it all the way back to this level, but it's not doable. And one thing I will use, one strategy we use all the time for projections and levels, I'm going to use Fibonacci, trend Fibonacci, and give you an idea of the levels we're looking. So, worst case scenario, I'm looking at a retracement, healthy pullback, I must say, healthy pullback, and a direct consequence of the trade talks between the US and China. I'm looking for a pullback all the way to the 61.8%. That will be 23,660, and this is as low as the market will go. That's it. The markets there are different components that we have to understand right now. We have the variable, the 2020 election coming. As I mentioned before, Donald Trump, he sells himself as one of the greatest businessmen of the century. So he will do everything in his power to make sure the stock market goes up. That's what it is. The second, if you're looking for a broad perspective, it's not convenient for the US nor China to enter in a battle because they will damage global growth. That's simple to see. Third, you have a combination of still a little bit of fuel of the tax breaks, tax benefits that companies receive under the Trump administration. And also there is way around, there is the reset of the values that are in the calculation of the last 10 years that are coming all the way from 2009. So once you remove those calculations, you will see it's easy to understand how some contrarians, not really bearish analysts and economists, some contrarians really think that once you remove those values, stocks valuations are super affordable, and everyone will go and add more equities. Now, also this will come with another situation, weakness in the US dollar, but that's for a different video. So what I want to convey here is this projection. If this is the range and this is the pullback and it goes as deep as 23,600, I'm just going to do this. The entire range goes from this level to here, from 21,788 all the way to 26,719. I take this projection and I take it from this level. I'm looking at somewhere to $28,743 for the Dow Jones. This is where I see the Dow Jones before the end of 2019. Now, if the pullback is not as deep as expected, this is what is going to happen. If we finish here or there's a surprise, then we are easily looking at 29,000. Now, here's one thing you have to add, and this is the last thesis that I want to leave you on this during this video. The market goes as high as you think, and this is the projection. But at this point, between this area, there is the fear of missing out, FOMO. And what happens is that can push equities a little bit higher. My target is that based on this technical projection, based on the retracement, if it only retraces to the 38, well, easily we can get here, and that will propel with an extra even 10% more the Dow all the way to the range between 33,000 to 35,000. And this is what I see the Dow. This is basically because there will be a combination of technical expansion. We're using the Fibonacci, the trend Fibonacci retracement, as low as stocks can go. We're looking at the weekly chart. So this expansion is the one that I will definitely see propelling our longs on Kellogs and also the options. Now, my expectation is not entirely the expectation of the team at Market Traders Daily, is that we will have a stable market. Markets can rotate. Markets can rotate from here to this level. You can see this is the previous critical support all the way back to March 2018. You have it here, December, November 2017, and then this high. So markets can go sideways and rotate around this area before breaking to the upside. So keep in mind, my target for the Dow Jones this year, 2019, 33,000 up to 35,000. A combination of technical factors and the all good boy FOMO, fear of missing out. Thank you for watching, and make sure you subscribe yourself to this channel to receive more actionable content and quality ideas in the financial markets. Thank you.